Got the rand trading around 686 at the moment. Of course, we did see it trading at 684 earlier in the session, but really it looks like this is a weak dollar story more than anything else.
That's it, yeah. 685 is a really strong technical level, Stephen, and yeah, we've seen the rand facing ahead again, getting down, as you say, just below that 685 level, and it seems to be consolidating there for now, with the euro still looking strong. A bit of a retracement on that against the dollar, as well as the gold price retracing back from its highs this morning, sees the rand nudging back above the technical level of 685.
Well, if we do break down convincingly below 685, where to next for the rand?
Technically, it looks like R6.50 can be achieved in the medium term. You know, there is so much still going for the rand based on the interest rate differential on commodity prices. But as you say, it's really at the moment, it is a story about a weak dollar. And with quantitative easing and being on everyone's mind at the moment with the Fed meeting in November, all eyes will be obviously looking towards any further comments on that, or whether they even speak sooner than that with regards to quantitative easing. But we've seen the US markets reacting with their 10-year bond yields down to around 240. So that's what pretty much everyone's expecting at the moment, and that's what's leading to that rand strength right now.
Of course, with the euro almost at 140 against the dollar, one would think that things were going a bit better in Europe, but they're not really, are they? We had that Irish downgrade earlier this week.
Yeah, I mean, that's right. Europe had its own problems for quite some time now, with just the poor levels of debt that governments and banks are holding there, the quality of the debt, and the constant downgrades that they're getting from the credit rating agencies. And Ireland yesterday being downgraded and the outlook negative for them. So Europe itself has its own problems to worry about, but for the time being, it's being expressed as sell dollars and buy euro for now, and it's powering ahead. It does, you know, as much as you look at the charts and the levels and that it looks overdone, it still just seems to be continuing on that pace. It's difficult to call a top on these things right now with it behaving this way.
Of course, the next key data that the market will be looking for are those jobs numbers tomorrow afternoon. And ahead of those, we had the ADP employment report out yesterday, and that showed that 39,000 jobs were shed last month, and perhaps a bit of a negative precursor to the jobs data tomorrow.
Correct. As we know, non-farm payrolls and US unemployment are the real big numbers that we look at to give us some form of indication of recovery, and we need the consumer really in the States to recover, to build that economy and to get it back on the boil. And looking, as you say, at yesterday's employment figures, really disappointing the market. It's difficult to be too positive about tomorrow's number, which is expected to be flat from a negative previously, and with unemployment ticking up to around the 9.7 level. It is a concern that we could see US unemployment going back towards 10%, its lows of last year. So, you know, that would be rather negative for the market.
And of course, just another reason for the US Fed to come in with that quantitative easing sooner rather than later.
Correct, that's it, yeah.
Bonds, last week we saw a bit of bond selling, so we saw our yields coming a bit under pressure. Foreigners repatriating some of their cash. What's it been looking like this week on the bond market, James?
As you say, the bonds ended off the week last week on the weaker side of their range, and opening up this week, continuing with a sell-off, getting up on the 157s to around the 745 level, where it turned around quite quickly. And I mean, you know, the trend obviously with the interest rate differential is for stronger government stock for now, and yeah, that turned around and has powered back to where we are at the moment, sort of 20 basis points below those highs. And you know, technically it still looks like it can still go lower. And I mean, obviously we've looked at the figures. The foreign sort of portfolio inflow figures have turned and in some ways gone a little bit negative over the past couple of weeks, but you know, it is due, you would think, for a period of consolidation with trading these ranges. But for now, it's back towards the sort of middle and looks like it's going towards stronger levels once again.
Well, the rand trading at current levels of around 685. The pressure is going to be on the Reserve Bank to cut interest rates again. What's the short end of the curve telling us about interest rates at this stage? Are we going to get another cut next month?
Difficult to say. Next month, probably still a bit too soon. We haven't seen any communication as such from the Reserve Bank. as well as we've got more data figures, fortunately, at the end of this month to see before any sort of firm decision is made. We did see comments just about an hour ago coming out of the Reserve Bank, once again underlining the concerns around the levels of unemployment in South Africa, but not giving any hint as towards what the solution to that would be. But once again, it is on their minds. So, if we see some really bad data at the end of this month, there is every chance for a November one, and you would then start seeing the market price it in. At the moment, very little is being discounted for the November meeting. However, the chances moving out towards next, perhaps January, is increasing at the moment with these bonds moving stronger today. We've seen some interest for the FRA market at least to start discounting a little bit more. So, yeah, once again, look for the data, but at the moment, no indication from the Reserve Bank.
Gold and Forex numbers out this morning. We had net reserves increasing by $1.7 billion. And of course, we have had the higher gold price over the period. We also had the rand strengthening. What does the data tell you? Does it look like the SARB has been active in the market buying up dollars?
It could indicate that. I mean, the Reserve Bank has indicated about the sort of cost of accumulating dollars, but it is something that is required. A country does need to have those foreign exchange reserves. Certainly the higher commodity prices will be attributing to the valuation of the reserves in dollars. But with the rand strengthening, and you must assume there's some dollar buying. But more importantly, our reserve levels are up to 6.7 months of import cover, which 6 months is considered an international norm. So that's relatively positive news, at least on a trade front.